Okay, let's get some insight and analysis on the markets right now. David Nelson's chief strategist at Belpointe Asset Management joining us. David, nice to see you. Good morning. Anything that really stands out to you when it's sort of a market that has been waiting for more news on interest rates, leaning into some China stimulus news? What's kind of grabbing your attention these days?
I don't know. I guess, coming into today, it just feels like everybody's waiting for, this week's back-to-back inflation numbers. Pretty important for the Federal Reserve, pretty important for investors. The Fed will look at that. From my perspective, the Fed is, one step away from a policy error. I don't think they need to raise. I think Fed funds are already above inflation right now. That is in restrictive territory. All they have to do is just stay there. I've got one Fed official on my side, Raphael Bostic, Atlanta Fed president. He says that the Fed is done. Unfortunately, he's not a voting member.
Right. And I think, look, we are at that point. I mean, same conversations taking place here in Canada where, we've got an interest rate decision tomorrow, and people can make a strong case for and against. Investors have to make a decision, though, at this point on what they want to do, especially after that huge rally, for example, for tech stocks in the first half of the year. So what's your general message to investors who are trying to navigate through these waters?
Look, there are always challenges for the market. I've been doing this for a while. I can't remember a time when there wasn't, a wall of worry out there. The market right now is split into two camps, those that have embraced the bull market and maybe some of the secular growth drivers that are out there, AI in particular. And then the bears on the other side of that camp hiding in the bunkers. I would just say this, given what I see in the market, if you can't find something to buy out there, you probably should look for a new gig. There are a lot of stocks out here that are still attractive.
What would be, let's just jump right into it. I mean, what would be an example of a name or a sector or really anything that's catching your eye right now?
All right, so look, if you can't buy stocks, and I don't often recommend ETFs, look to the equal weighted index. The market is starting to broaden out. We're seeing even industrials start to do well. I doubt that the heavy lifting in the market will be done by Apple, Microsoft, and some of the mega cap stocks that are out there. That'll probably shift in leadership. We're already starting to see that. Look to something like RSP, that's the equal weighted S&P 500 index. That's a way for you to get involved and maybe not take on some of that technology risk. Interesting. And is there,
does it matter whether or not we successfully transition through this interest rate environment, the kind of potential economic cooling, or how would that influence how you decide to go?
We're going to have a recession at some point. Even I called for it last year. I thought certain that we would have it, and eventually that will play out. But if we hang out in the bunkers waiting for that to happen, we're going to miss a lot of opportunity. It's not just about NVIDIA, Microsoft, and the other AI giants out there. It's about the thousands of companies out there that will use that technology to enhance their bottom line. I'll give you one other one. Look at a company like, say, GM. They'll use AI in their cameras that look at their robotics on their assembly line to spot faults. If they can spot a fall, downtime at a company the size of GM, that's $20,000 a minute. That cuts right to the bottom line. Thousands of companies will embrace this technology in a lot of ways that we don't even understand yet.
Okay, well, let's lean into that for a second. Like, say somebody doesn't want or doesn't feel comfortable buying into an NVIDIA at this point because it's had this massive move. You've got we showed on our board for our TV audience, AMD was a name you're looking at. Not that AMD has been a secret this year. I mean, the stock has had a huge rally already, but certainly over the last decade, when you look at some of the power players, AMD is among them. When a stock is up 75%, but you're talking about these secular changes, what's going through your mind as an investor?
I think of AMD in some ways as an insurance policy. It's actually weak this morning. I'm not sure why it opened down, because it was actually trading up pre-market. Maybe there's a downgrade out there, but AMD will be a strong second player. And clearly the market leader. They control 90% of the market at this point. AMD is not going to be able to compete at that level. But the industrial marketplace is not going to want a monopoly. They're going to want a second player, maybe something at a cheaper price. AMD can fit that role. Lisa Su is one of the best in the business, the CEO. I think she'll find her niche and make it work very well.
I just want to try to wrap my head around, because I get this feedback from a lot of our audience. You're making an interesting case for tech. I know you're not tech all the time. You actually just sort of talked about some of the other areas that can outperform. But we had a conversation with a strategist earlier who's definitely not looking at those groups, certainly leaning into being more cautious right now, maybe looking at some of the cyclical areas that underperformed if we're talking about equities. And then there's this totally other set of conversations that wrap around the idea of, okay, well, maybe just look at some short-term debt, what you're getting paid to wait right now. It just feels like investors are getting so many different pundit views right now. It can sometimes be confusing to make sense of where to go.
You brought up some good points. Look, at all of those things you just mentioned are good investments. For the conservative investor, if they took half their money, and put it in short-term treasuries at 5%, and then park the rest of that in risk assets like stocks, that's a pretty good portfolio. That's something you could sleep with at night. If we had a significant drawdown in the market, you're not going to feel it that much. And that 50% that's your safe money, it's not earning nothing. It's going to be earning about 5%, not like other years where it earned absolutely nothing.
And I'll just finish off. We've got bank earnings in the U.S. kicking off later this week, and we'll be all over that too. So what do you think about financials, broadly speaking? I think I'm asking a question about the bigger players. In Canada, we only have a handful of names, so there are big players. And then, of course, there are the money center banks in the United States, which we'll be watching.
I own J.P. Morgan going into the number. I'm pretty nervous about it, as always with that company, because it's always a pretty big mover. I'm a little bit more concerned about the smaller banks. We haven't really addressed that problem. Each time the Fed raises rates, that exposes our financial plumbing, and some of those companies may not survive.